This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending February 26, 2022. Our question this week is, what is the dollar index, the DXY? The answer will be provided later in the video. This week, the market ended mixed. The Dow Jones Industrial Average increased 2.51% on Friday, but was down minus 0.06% for the week. The S&P 500 increased 2.24% on Friday and was up 0.82% for the week. The Nasdaq increased 1.64% on Friday and was up 1.08% for the week. Looking at the week, we can see that there were 6 up finishes versus 6 down finishes for the major indexes. On Monday, the market was closed. On Tuesday and Wednesday, all 3 major indexes finished down. On Thursday and Friday, they all finished up. The new unemployment claims were 232,000 versus 235,000 expected. Auto prices soared as buyers took out 6.5 and 7-year loans. The U.S. 10-year Treasury yield was little changed. Mortgage applications decreased 13.1%, the lowest level in over 2 years. Oil surged above $100 for the first time since 2014. And the Fed's favorite inflation gauge was up 5.2%. New unemployment claims, soaring auto prices, the U.S. 10-year Treasury yield, mortgage application decreases, oil prices surging above $100, the Fed's favorite inflation gauge going up are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is the DXY? The U.S. dollar index is a measure of the value of the U.S. dollar relative to the value of a basket of currencies of major U.S. trading partners. These include the euro, the Japanese yen, the Canadian dollar, the British pound, the Swedish krona, and the Swiss franc. The euro, as you can see, is the largest component of the index. The index is used to measure the value or strength of the U.S. dollar against these basket of 6 world currencies. The index was established in 1973 after the Bretton Woods Agreement was dissolved, which is also after the U.S. left the gold standard in 1971. The value of the index is an indication of the U.S. dollar's strength in global markets. It is possible to trade the U.S. dollar index through DXY ETFs like USDU and UUP. However, some savvy investors and traders use the DXY to understand the movement of money through various financial markets, including the stock market. Do you use the DXY to understand what is happening in the stock market? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it's not your fault. It was not taught to you in school. However, if you want to learn anything about the stock market, you are going to have to teach yourself. You can learn how to get wealth and income through the stock market. To do so, you must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending February 26, 2022. I had trades on two of the items on the list. The strongest performer on the list this week was Editas Medicine Incorporated, ticker symbol EDIT. It's in the first column. It increased 11.18% for the week and was up 6.56% on Friday. Editas is a clinical stage genome editing company that focuses on developing transformative genomic medicines to treat a range of serious diseases at the genetic level. Looking at a summary of results, you can see that Editas has decreased minus 36.35% year to date. I did not trade or generate cash flow from Editas this week, but I may so in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY so far in 2022. The Southside portfolio is down minus 17.98% versus minus 7.83% down for SPY, a difference of 10.15%. The Southside is losing to SPY by more than 10%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin continues to be in a bear market. Will it bounce back in 2022? Stay tuned to find out what happens to Bitcoin and the Southside portfolio, as the portfolio will remain heavily invested in Bitcoin. The portfolio is 82.34% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 12.1% of the portfolio. Cash is 5.56%. The cash flow generated for this week was 0.8% of the portfolio account value. The account value changed by minus 0.88%, Meanwhile, the S&P 500 ETF SPY changed by 0.81%. I sold option contracts on 2 positions this week, one call position and one put position that ranged from $226.40 to $374.05. You can get more details, including the total dollar amount of cash flow for the week, on the website Southside School of FinancialFreedom.com. Check out past videos for other questions of the week. They are listed in the description section. Please like, share, and subscribe.